All right, Roundtable Trading Thursdays. If you remember in yesterday's coaching session, we were taking a look at the Australian dollar. This is the weekly chart. And we looked at the trend lines. In fact, I spent the entire session talking about the methodology that I used, developed, dare I say, pioneered when it comes to trend lines. We talked about how to use them, what their purpose is, and how trend lines can describe the energy level as well as the rate of return in any market. So we've got the trend lines left from that session on the Australian dollar. Remember, we're simply looking at the Aussie settling into a particular rate of return on the weekly charts. If we go to the daily to get a little bit better view, this is where we can get reminded that the Aussie is starting to plug into resistance. Now remember, that resistance comes from our FXDB Pro tab. Sorry, I thought I had that. Let me pause here. There we go. So from our FXDB Pro tab, also on the basic, we saw resistance move down from the prior high around 800 to the current level at 557. And we're seeing price struggle, if you will, small days repeating themselves. Not a lot of upward momentum on the Australian dollar. Let me zoom in here on the dailies. So you can see here the last 4 days, in other words, for most of this week, price reaching up, coming back down, reaching down, coming back up, back and forth and back and forth. I want to reiterate that this is usually translated as indecision, like with Japanese candlesticks. This isn't indecision. This is a balance between the buyers and the sellers. So you get a very small, what's called the real body, right? The distance between the open and close, that shrinks, but then you get longer wicks. This is what we want to see when the market is coming up into resistance if we are looking to take a short position. So go down the hourly bars now. Zoom in. Remember, gosh, when was this? Tuesday. What we're looking for in particular with the Australian dollar, get my drawing tool. Come on, turn on. There we go. Are repeated attempts to break through resistance that fail. Now, the important thing here is to not try and be a hero. Don't anticipate price. Wait for the market to show you double tops. Remember, we had our original move up over here, the sneak attack. The double top actually came in over here. We had the market kind of pop up. This is where I was talking about the last time. This was way too low. We needed a price to get back up into this level here, which actually came in, I believe it was late in the Asian session yesterday. Yeah, well, early in the Asian session. So 9 o'clock Eastern time. That's right in the thick of things in the Asian session. This was the move up to look for. Now, we didn't get a very clean second look. In other words, we got the market popping up on the hourly bars, came back down, came right back up to that same level, and then dropped off. In fact, let me refresh this chart. There we go, and I'll zoom in. Come on, don't mess with me. My recording software is messing with Hercules again. But hopefully you can see it there. The second look came very fast. This is not an ideal double top. What I like is that the double top is separated by time. The reason why we want the time there is because it means more people have had more time to consider the price level and make a decision. When the second look, as it's called, comes very quickly, like in the next hour, you know what, that's a snap decision. You're probably seeing people in a more opportunistic way reacting to the market. It's just one of those nuances that comes from being in the markets for a long time. So anyway, there's the follow-up on the Australian dollar. Nothing really going on with the British pound either. If we take a look at the pound, again, trading in between resistance, which is up here at 57.40, and support, which is down closer to 54.60. There's just not enough going on here to make trades. Again, it's not the time to be a hero. It's not the time to try and figure out how to get, eke a living out from these, unless you're willing to be that aggressive trader, unless you're willing to monitor the market, stay in front of the market, which isn't a bad thing. You just need to know what it takes to make money at that level. You got to be in front of the market. You need to be willing to trade during the London session, and you got to be willing to get stopped out more often for less money.